Yeah, I figure, might as well jump in. I'm really curious just to hear about, recent investments you're excited about at Brooklyn Bridge and kind of what's new.
Yeah, sure. So, I'm a pretty early stage investor. I would probably say maybe one of the earliest stage funds in New York when it comes to leading rounds. So, about 50% of the companies that I invest in have yet to actually launch their product when I invest. So, if you think about the timeline of sort of in a company's history when I come in, it's probably when they first go out to fundraise, which I'm going to guess is probably sort of 9 to 12 months after idea generation.
Hmm.
Takes some time to sort of research, maybe get a little bit of a team together, prototype, all of that sort of stuff. And so what you're looking at now are companies born during the pandemic, right? If you just imagine that timeline, and so it's kind of not surprising in a way that a fair number of the companies that I just recently done have been in the healthcare space because there's sort of been a renewed interest in that. But I'm pretty much a generalist, so I don't seek to do things in particular sectors. I'm kind of a taker of whatever entrepreneurs happen to be focused on. But it's not surprising that healthcare is for sure a focus. I've also done a few deals, done one and committed to another using AI and NLP. There's been a lot of sort of language processing, entity extraction advancements that people are looking to do in interesting kind of sort of applied ways. Um, but it's really, it ebbs and flows. It's sort of, all over the board. And yesterday I committed to something in the art space. So, you never know what comes down. It keeps things interesting.
Right. It sounds like a good startup is just a good startup.
For sure, for sure. And, I also feel like you can either focus on a sector or a geography, but not both, right? And so I am fully focused on New York City companies. So to have a wide enough scope to be doing deals, I'm focused on, or I'm not particularly focused on any one sector.
So you mentioned kind of healthcare. Do you feel like once the pandemic blows over, will that renewed interest in health tech and these kinds of startups, will that still be there?
Yeah, no, I think what the pandemic has done is really revealed a lot of inequities in the healthcare system and ways in which it was like broken but kind of muddling along. And the pandemic has been a huge stress test on many functions of the economy. And I think there's this sort of sense of, to borrow a sort of presidential slogan, is this build back better, is this the idea of like, okay, we've had this major disruption. We are envisioning how systems should work, but now we're doing it through the lens of equity and accessibility and all of this sort of stuff. So that's a common theme that I'm seeing that isn't really going to go away. I mean, that cat's out of the bag. And so it's not like we're going to forget that huge chunks of the population had difficulty accessing healthcare, and especially like, even when we, sort of get vaccines and it becomes safe to go out and about, it's not like the health effects that were caused by the pandemic are going to go away. There's still will be lingering issues. We will still wind up having to manage vaccine booster shots over time related to, variants and stuff like that. So I think all of these the revelations of how the system didn't work will certainly stay.
Yeah, absolutely. Yeah, so speaking of NYC startups, funding, I recently read that funding has just spiked, even just at the start of 2021, compared to previous years. Um, what's your take on that? Why is the NYC startup community finally like thriving?
Well, I think it's been thriving for quite a while. I mean, it's been a long time that New York has been the second largest venture ecosystem in the country. So that's not necessarily a kind of new thing. I'm super excited about the community, but I am also sort of a headline number skeptic. So when you see funding growth and all of this sort of stuff, it is very different than the experience of the average pre-seed or seed stage entrepreneur, right? And so first of all, those aggregate funding numbers are disproportionately skewed by much larger later stage deals, right? So somebody comes along, raises $250 million, $500 million, that is literally 300 startups basically raising their seed round. And so one or two big deals completely skews those numbers. It skews the aggregate numbers. It skews the gender and ethnicity numbers. And those are companies that were put in the ground 6 years ago, right? And so what you're seeing on a lot of the aggregate numbers is a result of a sort of different time period of initial funding. The thing I like to think about more is what is the experience of the founder today who goes out for their first round of financing. And in some ways, I think that the New York ecosystem is probably a little bit harder for them in some ways than it may have been pre-pandemic, because the one of the best things about New York is our vibrant event and meetup ecosystem, where you can meet a VC by stumbling into any one of the 10 events that are going on any particular night of the week. And now they're Zooms, but it's this very sort of limited interaction. You sort of log into the beginning of the panel, you log out to the end of the panel. There isn't that bum rushing the VC at the end, or riding the elevator up with them on the way to that sort of stuff. So I'm looking forward to getting back to that. So I think it has been a little bit harder to do the kind of break-in to the network kind of stuff, which is why I think there's been a huge growth. You just saw On Deck raised a big round, but these fellowship groups, these networking groups where people are essentially outsourcing their networking, basically saying, you know what, like, I'm going to join a group that's going to instantly connect me to a peer group, because it's relatively hard to do in a work from home world. So I do think there's going to be a lot of excitement to get back to that, because that was one of the best things about the New York ecosystem. And then secondarily, I think the New York ecosystem is largely driven by where people want to live. And man, like I don't think I've ever seen so much excitement about being in New York as people are about being in New York over the summer. Like, there is a palatable, I mean, because if anything, I totally get, especially if you have kids, the exodus thing, if I can't interact with other people, I want a front yard kind of thing, right? But as soon as that is over, I don't know anywhere else where you'd rather interact with the people, right? As soon as you're, vaccinated and ready to go out and about, what other community would you rather be, connected to, interacting with, for any number of reasons, right? Because it's not purely a tech community, right? I don't think I could ever live in an industry town where there's like one main thing and you're either like in the industry or you're not. So the way that LA and film, or the Valley and the tech community, or I don't know, Dallas and oil, or whatever.
Or in
So
New York, it's more like every neighborhood is its own little industry.
yeah, I mean, it's like I have banker friends and actor friends and circus performer friends and media friends and all of that sort of stuff. So that professional diversity, I think, is really interesting, especially in this world of applied tech, where it's not just that I'm building a database, but I'm building something for a particular community, fintech, healthcare, media, what have you. Um, I also think that, look, most startup entrepreneurs skew younger, skew more liberal on average. And so, for as much as, there's excitement about, some other ecosystems, right? Like, I cannot imagine living in a city or state where, my legislatures are, you know, taking away voting rights or all of that sort of stuff, right? I mean, that's really sort of problematic. And so I think for that reason, I think New York is a good place to be, where you could sort of at least trust that most of the laws that get created are ones that are, promoting equality and accessibility and all of this sort of stuff. And then I think lastly, um, New York is a very hackable city, in the sense that, you know, there are places to live that are more reasonable from a housing cost. I mean, look, it's still incredibly expensive relative to some other places, but the subway can get you places. You don't have to live in the West Village when you live in New York, right? You can live in Astoria or Sunnyside and Queens and still, you know, get to where you need to go pretty easily. Versus, I look at the Valley, and if you don't live in San Francisco proper, socially you're kind of off the end of the earth a little bit. I mean, there's a growing community in Oakland and in a couple of other places, but I mean, it is not the most accessible place to be in the world.
Yeah, yeah. No, that's so true about New York and neighborhoods, and I've lived in Astoria and all sorts of strange neighborhoods. So I couldn't agree more.
That's great. You're renting from some little Greek couple, and they bring you cookies and all that. It's a very kind of neighborhood, authentic neighborhoody place.
Totally. Yeah, no, you happen to pick one of my favorite neighborhoods too. A lot of friends there, and I miss it. Um, Yeah, I guess there's a lot of topics in there that I want to get a little deeper into. I mean, you mentioned the founder experience in New York changing and kind of suffering from the pandemic. Um, I guess it probably mirrors the VC experience. Like, how has your experience been, before and after?
Yeah, and what I was specifically referencing is like the new founder experience, right?
Mhm.
Because if you are a founder and you have a company and you're running, you're like a little bit heads down, and look, the emotional toll that the pandemic has taken on people is large. But for those who've sort of figured out a way to address that, it has been some of the most focused time, right? Because you got nothing else to do, you might as well work on your company. So in that sense, for some people, it's been sort of positive and productive and all of that sort of stuff. Um, but I think for the serendipity aspect of it, I think it's been difficult and not quite the same. From the VC side, I think everybody's different. My experience has been, to my surprise, I actually don't mind initial pitch meetings over Zoom as much as I used to dislike phone calls. I mean, I never really did sort of Zoom meetings to start out, but I really hate the phone, which is funny to me because I feel like I spent all of high school with a phone on my ear, after school. But you know, it's not something I ever really did. I really liked in-person meetings, but I have found that initial sort of screening meeting to be particularly efficient. Where I find things have been most difficult is actually working with portfolio companies. there are some instances where you just want to sit in a room and hop on a whiteboard and sort of think about things and explore and all of that sort of stuff. And that is incredibly difficult to do over Zoom when you're just writing out diagrams, passing it to somebody across the table, up at a mark or what have you. So I can't wait to get back to that. I think that part, especially when things aren't going well. I think it is the empathy aspect of being on the board of a company has suffered during this period of time. I don't think, and maybe it's just me, I don't think I found a great way to communicate when things aren't going well and how it's still okay, but the urgency around, but we have a lot of work to do. And let's, and I'm not, I know this has been a tough time, but this app's not working, right? Like, how do you kind of manage that conversation remotely? I think it's much easier to do in the same room.
Yeah, I think no one seems to have an answer to that, at least, in my experience. And I think that could in some ways translate to all sorts of industries, like whenever there's an issue. And that must explain why so many workers feel anxiety working from home as well, because, the communication just isn't as smooth as it used
Yeah,
to.
there's a lot of communication that happens around body language that I think is a little bit lost. And yeah, I mean, look, I had a conversation. I was fortunate enough to be vaccinated, and so I took an in-person meeting with one of my companies last week, and it was a difficult conversation that had started sort of remotely, and the conversation was so much better in person. It was just a million times better. Not necessarily easier, but just a little more human, I thought.
Right. So, we will get to a point where that will return, on a larger scale. And like you said, people are very excited about New York like they've never been. Um, where do you see the NYC startup ecosystem in 5 years?
I think we're on a good trajectory. I think in 5 years, the thing I would like to see is the idea of the walkable tech community. The idea that it isn't so Manhattan centric. Because the interesting thing is, like, by number, there are more people who work in the tech community who live in Brooklyn than there are in Manhattan, like easily. I mean, if you just think about the population of those two boroughs relative to each other, right? Brooklyn is what I think we're 2.5 million, and Manhattan's like 1.8 at peak, or at least at modern peak. When my grandmother was, in a kid, it was probably a lot longer than that, but they were all on the Lower East Side.
Like sardines, yeah.
Yeah, exactly. So, but I think for professional purposes, and it's part of the way that transportation is designed, where most transportation is like subways in and out of the city, right? So if you want to get sort of critical mass of people together, it's like, look, a lot of tech people live in Williamsburg, but getting from Park Slope to Williamsburg over public transportation is like not the easiest thing in the world.
No.
Um, but there is an order of magnitude more cycling going on. City Bike has had a huge expansion. Revel has had a huge expansion. Scooters have had a huge expansion. And so I think it is incrementally a lot easier to sort of cart yourself around the city and from borough to borough or neighborhood to neighborhood. And I think now you're getting to a critical mass where, like, the South Brooklyn Tech Meetup or the North Brooklyn Tech Meetup or the Queens Tech Meetup or what have you, it's a fairly large group of people, right? And so it almost reminds me of like back in sort of 2006, 7, 8, 9, where it used to be fun to go to the New York Tech Meetup when it was a couple hundred people, and it was sort of felt small and you knew everybody and all of this sort of stuff. I could see now that we've gotten to a point where like that type of thing now pops up in several places throughout the boroughs. And it's not just, it's funny, when I started Brooklyn Bridge Ventures and people were saying, well, it's so surprising that Brooklyn Bridge Ventures was the first VC firm to be located in Brooklyn. And I said, well, actually, is it? Because how many VCs, period, actually lived in Brooklyn in 2012 that would be able to start a fund? And it just frankly wasn't many. Now, almost 10 years later, I think that's a fairly large number now, actually. And so you've now seen enough maturity of the communities in those outer boroughs where, I could see commuting distance to your local tech event shrinking significantly in the next 5 years.
Hmm. And I guess moving more, back to the company side, what are your guys' plans for returning to the office? Do you have any sort of ideas there?
Um, yeah, so we actually got rid of our I have one other employee, Lauren Magnuson, and we actually got rid of our office in November of 19.
Okay.
We just found that we have two very different working approaches. So I do all of the investment stuff. And so it just made less sense for me to be in a space that didn't have, a good conference space. And I wound up moving, instead of just being in one office all the time, splitting between like a Dumbo House membership and a BetaWorks Studios membership, and sort of bouncing back and forth between those two places so I could be sort of closer to companies and founders and all of that sort of stuff. I think realistically she will probably return to a space, because otherwise, like, not having coworkers that are sort of in the office all the time, this is probably a pretty lonely setup. So I think just from her own sort of mental health perspective, I think it'd be better for her to be in a place where there are like people regularly. Um, in terms of the companies, I see a mix. I have a couple of later stage companies that are taking advantage of really nice lease terms,
Hmm.
where the majority of their employees are still in New York. If they can get a good deal, they're signing leases. Now, I think the expectation, those leases are probably a little smaller in square footage, because I think the estimate now, instead of getting a space for, call it 100 to 150% of your people anticipating growth, you're now getting a space for 70 to 80% of your people, because you only imagine that 50% of them will ever be in the office at the same time.
There's going to be some sort of hybrid model, and some people have already moved. Yeah.
Yeah, and I think like on days where you have to connect with people, you will come to the office, and on other days there isn't the expectation that you're there. Um, and so I think like we've all proven that we can get our work done sometimes more efficiently when we're at home, particularly if you don't also have kids at home at the same time. I think that's been sort of a real struggle, right? Is that the childcare situation has obviously made work from home fairly difficult. But if you can solve for that problem, it really changes the dynamics. And I think you could have people working very productively, doing the sort of 3 days in the office, 2 days out kind of thing. I think you're going to see a lot of that as a more permanent part of how people work, which
Right.
means, more flex desks, more, you know, uh, more flexible setups in general.
Hmm. Yeah, that makes sense. So I guess I'm also curious about some of your thoughts on social media, and I know that you were kind of early to Twitter, and now there's Clubhouse and there's all these other new sort of platforms and the creator economy. Did you expect Clubhouse to get so big?
Well, I mean, so big is an interesting. I mean, there are a lot of signups,
Right, right.
but I mean, it does feel like, given the way they've growth hacked their way to stealing all my contacts, and I mean, I guess I gave them permission for it, but um, and everybody that I've ever met in my whole life signing up, but most of these people don't go on,
Hmm.
so their percentage of users who regularly make it a point to join is um, fairly low. I think you're seeing two things, right? There's one Clubhouse behavior where it's like, I'm going to log into Clubhouse because I know there's going to be good stuff there and I'm open to what I find. And then there's another behavior that's like, oh, I saw a conversation that I'm interested in and I need to log into Clubhouse to use it. That's two different things, right? In that latter case, Clubhouse is just Zoom, right? It isn't a discovery platform. It's just the tool I need to download to listen to the conversation I want to listen to. The vast majority of people who are using Clubhouse are that. It's just that they found a thing and what do I have to download to get it? And then if they don't find anything, they won't use it. That is probably my favorite thing about the platform itself, is that it is fairly easy just to start a conversation and to get the discoverability and to just start talking. Um, that being said, that ease is also what, to me, makes the overall quality of the conversation on the platform fairly low. I mean, if you think about it, the two closest comparisons are podcasts and conference panels. And Clubhouse is a definitively worse version of each, right? It's like a podcast that has no story structure, no editing, in which the audience takes a much larger percentage of the content than the curated experts. Now there's two different groups, right? It's like, look, if you are an aspirational founder with an idea sort of outside the ecosystem, and this is your one and only shot to have a conversation with, I don't know, Mark Andreessen or whoever, then you think it's the coolest thing in the world. If you are a seed or Series A backed founder, with kids and busy things going on in your life, and you are looking for the maximum amount of information for your minutes spent, it's way worse than a podcast. And it's demanding of your time, right? Like, you can't time shift it to your 5:30 a.m. bike ride or workout or what have you, or and so that's a real limiting kind of factor. So yeah, I think that earlier behavior, that it isn't going to be as mass appeal. Look, particularly when everybody gets out and about, right? I mean, you even see it now, actually. I mean, if you log into Clubhouse and you look at the numbers of the attendees of events where, like, Elon Musk is not there, it's definitively lower than it was a few months ago in the middle of the winter, for sure. Um, And so, what will be its place in the ecosystem? I think it's probably going to be more platform-like. I think they'll have to build sort of more tools. Um, I think there'll be some paid tools. I think you'll have some people sort of making a full-time living, sort of, doing subscription access to rooms and stuff like that. The one thing I would say, though, is that platforms like Clubhouse and Substack need to solve for the per publication fee. Because look, there are some newsletters that I think are particularly interesting, but there's a theoretical limit to how many newsletters I could subscribe to for $10 a month. I mean, if you think about, like, what does Netflix cost me now, 18 bucks or whatever, like, and the value that Netflix brings me versus an individual newsletter, its pricing is sort of way out of whack. I mean, there might be one or two people where you're like, I'm really, in on subscribing to that person. But I think you have a couple of issues. One is that people are more likely to pay for water cooler stuff, where, like, oh, everyone's following Fred Wilson's blog, and so I need to follow that too because everybody else does, right? Regardless of whether it's directly relevant to the kind of business that I'm, going into. But what that does mean is that there is some media content, some investigative journalism, and all of that sort of stuff that, like, will struggle to get funded because it's just really good reporting, or it's a perspective from somebody who isn't on the inside of the tech community, that doesn't have the biggest following, but is still important. And if we're just monetizing only sort of water cooler personalities, then a disproportionate percentage of the revenues are going to go to these types of people. I think it should be much more based on, like, a class pass style model where, hey, you know what? I'm happy to pay $10, $20, $30, some tiered thing for my minutes of access, but distribute it to where I happen to listen, right? And if I discover a new room on Clubhouse that is really good and I actually, spend some time on it, give them most of the money that I put in for the $30 of subscription that I was paying, right? Like, don't put a barrier to say, here's the person that you've never heard of, it's going to cost you $10 to see their thing. So I think there's some real issues with how they're sort of have designs on monetizing that I think will just have too many water coolers, and you'll have this, like, insidery group that just feels like they have to follow a certain people, and then a long tail of interesting writers that are really struggling to get, monetized. That's a Substack issue. I think it's a Clubhouse issue.
Would you say that's a issue in the broader creator economy, whether that's Patreon or YouTube or what have you?
Well, it's an issue where I have to make a new subscription decision to every, it's less so in an ad-supported way. I
Right.
mean, and it's less so, for algorithmically driven platforms, right? Where, TikTok, you can go from, 0 to hero very quickly if you have sort of high quality stuff. Um, the follower model sort of reinforces existing networks, right? Like, it's not, you always get sort of a new batch of people, but if you look at the most followed people on Clubhouse, 2/3 of them are the most followed or most influential in other circles already. It's really not sort of this open meritocracy, I think. Um, So it depends on how you get sort of monetized.
Yeah, yeah, that makes sense. Yeah, each platform sort of falls somewhere else on that spectrum of like water cooler moments slash, other things. Um, so I guess I don't want to keep you too much longer if we're short on time. Um, one of the last questions I wanted to ask was just kind of back to New York and your what you think about the mayoral race and your thoughts about that.
So what in particular?
Any candidates you're interested in? Any ones you're not interested in?
Yeah. So first of all, the leading candidate right now is undecided.
Right.
So the latest poll shows 50% of people don't know who they're voting for. Um, which to me, I look at it like it is both an opportunity and a challenge. Um, it's a challenge because I think it has been very hard for candidates who did not already have a lot of name recognition to break through. Um, and because there's just there's limited things that you could sort of do because you can't, it's been limited to be able to campaign in person. And now that the weather's warming up, I think you'll see a little more of that. I mean, frankly, I think one of the biggest issues is the average New Yorker is kind of busy with other stuff and, you know, um, doesn't, I don't think really appreciates how important a decision this is. They just sort of think of the city as this thing that kind of runs on its own. It's this, you know, big bureaucratic immovable mechanism, which is both bad and good. It's bad in the sense that like we wish it did things more efficiently, but good in the sense that no matter how bad a mayor you are, you probably won't screw it up that badly. And I don't think that's necessarily true, right? Most people have a pretty low opinion of Bill de Blasio, and yet, New York has not descended into chaos despite two, back-to-back terms of him. But I think there are real issues, right? He's really not been able to make, after 8 years, a dent in the cost of housing. Um, Look, I think there are, serious serious indecision that was very costly during the pandemic time, both from a sort of immediate triaging and closing decisions, but also on the school side. I mean, the school thing has been a disaster, right? Like, okay, last spring, no one was prepared for that, right? But even if you just say, okay, spring of 2020 is a wash, we're going to do what we can, but like this is a mess and we're just going to try and keep our heads above water. But you had it all summer. Like you knew kids were going to have to go back, right? Why there weren't tents in parks and in the streets and outdoor learning and all of this sort of stuff. And frankly, kids should have gone back earlier, right? We should have had kids back in school July 15th, outdoors under tents, so that you can get as much of a full year in as possible until November, and then just send them home from November until wherever, and then do what you can in terms of online learning. But at least you get 4 months in or 3 months in or something like that, right? The fact that the opening of school was delayed in September was like, what did you think was going to happen at this point? Like plans should have been made. Um, so all of that sort of stuff is one of the reasons why when I look at this, I think running New York City is a very complicated mechanism that requires experience, practicality, decisiveness. And I look at the people who are running for mayor. I think by far Catherine Garcia is the most qualified and most experienced person around the table. She's a former New York City sanitation commissioner. I mean, like I don't even think like anybody else is really close.
And
Um,
Andrew Yang, what are your thoughts on him?
I don't think Andrew Yang is qualified to run much of anything. I think he's a smart, super well-intentioned person who really wants to be liked, and really sort of thrives on the approval of others. It seems to me, which is why there doesn't seem to be any consistency in his platform whatsoever. It seems like every day he's sort of like jumping on whatever the consultants tell him will be the thing that'll win more votes or what have you. But I would be really worried if I were the Yang campaign. If you had 90% name recognition and you came in at 16% in the polls, like you might be leading technically, but that would also mean that like the vast majority of the people who already know who you are not picking you. And so I think it's really problematic if he wins because he has to learn on the job. He's got to learn on the job. And the other thing is like the New York media environment is not kind.
No.
And he has shown a real difficulty in dealing with some really thorny issues that people really care about. Some sensitive ethnic and racial issues, gender stuff. I mean, like, look, I'm not an expert in Arab-Israeli politics, but I'm also not running for mayor or any other elected position. So to, sort of stick your foot in your mouth on BDS related stuff and you need a really savvy person at the helm who understands that 40% of the people in New York were not even born in the United States, and that you have these communities that are have a lot of important issues, and you're trying really hard to make everybody live together cohesively. I think he's not particularly up to that task, and it really worries me. But I also think he's going to have lower turnout because I think there's like a lot of excitement from a lot of people that might not make it out to primary day. I mean, he's never voted in a mayoral election himself. And so I
Wow,
think,
I didn't know that.
no, he's never voted in a New York City mayoral election, which is astounding. So I think there's probably more buzz than there is substance there. But that also means that the person who's currently second in the polls, Eric Adams, I think is hugely problematic. He's a former Republican, former police officer, very much well-funded by real estate interests. There's been a ton of, funding probes and campaign finance stuff. And he's just feels very much like a sort of bought and paid for, owes too many people too many things, and has a very problematic relationship with guns that I don't think is appropriate for New York. He's sort of very much a good guy with a gun mentality, and I don't think that's really makes sense in a kind of major city. So we don't have that much time until the primary, and so I'm actively trying to help Catherine Garcia with her name recognition.
Yeah, I can say as a New Yorker that I've been guilty of, sleeping on all these issues. And we've got just a
June
couple months.
22nd, man, that's the election. I mean,
Right, it's very
whoever wins the
soon.
Democratic primary is going to win. I mean, Curtis Sliwa is not getting elected. So,
Of course.
it's.
Yeah, no, it's definitely, after this conversation, much higher on my to-do list.
Check out the Schlep to City Hall. It's a podcast that Lillian Ruiz and I started on the elections. And we've been interviewing candidates, talking about different aspects of the budget and the elections and all of that sort of stuff. And so it's a good primer.
Yeah, no, that sounds super interesting. I guess, do we have time for one more question?
Yeah, sure. Yeah, let's finish.
Yeah, great. I guess this is just more broad. I know that you've written a lot about politics on your blog, and I don't see a whole lot of VCs really getting in the weeds with that. Why should venture capital care about its effect on the world politically?
Venture capital invests in companies that have to participate in the world. It invests in companies that need users who are citizens of the world. And so we can't pretend to be in a bubble that isn't affected by it. I think that Silicon Valley has this kind of libertarian view that, you know, tech can sort of float above it all. And I just think that's just not true in many ways, right? Like the idea that like there are undoubtedly um, you know uh, venture capitalists who were Trump voters the first time around, who sort of like voted with their pocket pretty much. They were just like, hey, I like tax cuts, and yeah, all this sort of rhetoric. He's not serious. He's just trying to stir up his base, this country is not going to enact real racist policies. So, we're probably fine along those. That's a whole lot of sound and fury. I don't need to worry about that. Well, look, we've seen, like, can you imagine how the US would have been had the US government's response to COVID been as capable as New Zealand or any of these other, countries that actually sort of took it seriously,
Insert
right?
country here. Yeah.
Yeah, anywhere, right? And that had a major and devastating effect on the economy. Um, and if you don't think that the rest of the country is affected by who is president after the last year, then you are like truly on an island somewhere, right?
Yeah.
And so I think that's problematic. I mean, we came extraordinarily close to not being able to have the peaceful transfer of power in this country, right? I don't think that you wouldn't start a venture capital fund in Venezuela.
No.
So like if you don't, if like emerging markets risk is something that you don't want to take because of government instability, then like what were you watching on January 6th? Like how do you square that circle? Because that that kind of thing is extremely problematic. And I think it has long-term effects too. And I think, at the end of the day, we can't survive over the long term in this country. Look, venture capital is a long-term asset class, right? These funds last for 10, 11, 12 years. So you're talking about, if you're raising 3 funds or 4 funds as a venture capitalist, you're talking about a 20-year time horizon. And on a 20-year time horizon, if we don't do stuff to improve education outcomes, healthcare outcomes, climate outcomes, you are looking at the US sort of slipping into, the US slipping into third world country. I mean, look, parts of the US currently have third world country outcomes on healthcare and education and all of that sort of stuff. And that's just going to grow, right? And that's your home market. That's seriously problematic. So, from that perspective, we have a huge economic incentive to make sure there's as much equity as possible in this country, because those are your customers for these products. They need to be able to afford stuff. Like that's your talent, right? They need to be able to learn stuff so you can build all this interesting stuff. We need to have sensible immigration policies because, Could you imagine what the US tech economy would be like if we had had closed borders over the last 40 years?
Oh, totally, totally. Yeah.
Who would be
And so
building
many
all of
people
this
have brought
stuff?
that up. Right.
So yeah, that's my rant. That's my soapbox on that.